Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take
Hi,
no loss.
and welcome to the Conscious Day Trader. Today we're going to analyze another trade that I literally closed probably 5 minutes ago, and it's going to be on the Ict 2022 mentorship concept. And we shorted the pound dollar, even though my bigger picture bias is that the pound dollar is going up. We're going to see how we use the dollar index and the pound dollar pair to come up with a short in the market, and what were the reasons, what were the entries, how we exited the market, how we managed the market. So make sure you subscribe and like this video, because I'll make more of these the more of I see interest. First, the results of the day. As you can see, and we're going to look at this drop here. That was my original idea. I didn't hold for that because I was paid half a grand in a day, 529 after commissions, and I was happy with that. I could have held for that move, but as I said, we closed. And when you see these short £10, $22, sorry, these are repositioning of trades. It's not for profit. So 0.5 of a lot size and 1 lot size. I generally trade for two positions, and then I juggle them around to get a better position to let them run. When I'm being paid for sort of $500 and up, I'll just close it and go and do other things like making this video for you guys. So let's jump on to TradingView. This is the pound dollar. And what I want you to see, I've identified some areas. First of all, like with any ICT video, we're going to identify bias. And as I said, I shorted the market even though I have an idea that the pound dollar wants to go higher. And where will it want to go? As you can see on the left side here, we have a fair value gap. If I zoom in, this is on the daily chart. From that wick to that wick there, if I make it even better, that wick to that wick. And let's move it out of the way. So you can see that fair value gap there that still hasn't been filled. However, today, what has been what the move was, if you want, is it retested these previously highs, which was in the fair value gap. Where did I think the market could go? In buy side liquidity above this area here. If we drop onto 1 hour, you will see an equal high around this area, which has shown a reaction to the 125. And as we always talk about, equal highs are areas where the price wants to go and liquidate. So we had that equal high there exactly on 25, and that equal on 25 as well. So we have a confirmation that price, you know, the algorithm does target the round number. In this case, the 1250. This also stays in a buy side liquidity because it's above intermediate highs, and this also coincides with our fair value gap from the day. So yes, the market did go up originally, and I could have traded that. The reason why I didn't go long was because of the previous daily candle. As we can see on the previous daily candle, and what we normally do is put the previous daily high and the previous daily low. So we added on the previous daily high and the previous daily low down here. And what we can see is the price was trading higher and higher and higher, like we discussed. If you're not in that trade and you look at equilibrium from the previous day, this price is extremely premium. So for me, it was quite risky to trade into the buy side liquidity for 2 reasons. 1, because we're at a premium. 2, we're trading outside the previous daily range, and we had a previous equal high on the left side here, which, well, relative swing high that the price would have a reaction to. Last time we were there, we had that huge candle that crashed down on the 15th of December. So multiple reasons why I wasn't comfortable going long. Now, how did I find my trade? Let's go on to the 15-minute. And now we're going to talk a bit about how we can use the pound dollar and the index in correlation to see what potentially could be the targets. Another area that gave me confidence that the dollar will want to come lower is the potential of the dollar. If we go on to the 1 hour, the dollar had a gap. Let's take this fib away. Had a gap, opened over the weekend with a gap above the daily low. So again, we're trading at extreme discount price from the previous day. We're outside of the range. That gap is sitting roughly between the 38, well, exactly between the 38 and the 50%. So it's highly likely that price would want to retrace back into the fair value, not the fair value gap, but the actual price gap. And what that means is the blue, you will identify with the blue, where there's a gap between that value there and that value there, and there's no price in between, there's gap here. Now, if that doesn't happen today, it will happen in the future. What we also have close by is the 102, which will be another area, as you can see here, has been respected. And the algorithm will target that for liquidity. And what we're looking for now is, if we go back into, this is the hour, so let's go back into our trade. And what did I see when I opened the charts? Back to the beginning of London, and we'll change that to London time. We'll see around 7 o'clock, we saw the price of the dollar being strong. So I wanted to wait and see confirmation. Obviously that if I'm shorting pound, this is a good sign, because what's happening when the dollar is weak, that means the pound dollar is strong. So it's increasing the premium price of the pound dollar. And because I want to short, I want to take as premium price as possible. And as you can see here, if we go and do the same on the pound dollar, and we take that to the open of the session, 7 o'clock, you will see that increase of the dollar going up. And that was perfect. That's exactly what we were looking for. We also had that blue line for the equal highs from previous time. If we go on to the 1 hour, that equal high from the New York session back in 14th of December, exactly equal highs. So that was another confluence of information that was giving me another area that I would be interested to short. So we had multiple factors, and I had these two charts open at the same time, and I wanted dollar to come higher eventually to fill in that gap so I can short the pound dollar. Also, what we had below, where could this market go? We had the 105 that went close enough, 105.3, and a fair value gap onto the daily on the left side that got filled from this move, and now it's coming back to retest that area there. So multiple areas of where the targets of the dollar can be going in during this week. As we discussed, I don't think we discussed, we didn't have any news. I used baby pips to look at the news, so I was quite confident that this can be a positioning day without a lot of influence from the news, well, planned news on the economic calendar. So as we saw this, and I can only have one replay, so we'll look at the, if we go to the 15-minute and we go to the 7 o'clock candle, as we said, we wanted to see a strong dollar originally. And as we got a strong dollar, the strong dollar came and filled that gap there, exactly there. So that was a good indication for me that this potentially will become a weaker dollar, sorry, and then it will come back up in to give me a better value for the pound shorting it. Now, looking at this live, if I held, it would be exactly where I've put my sell side liquidity, which is beautiful to watch. But what we're going to do is, I didn't trade that. I close the trade at 7. And we're going to go candle by candle. I'm only going to focus on the pound dollar, but I was looking at the dollar to create a confluence of why I want to go in. As you can see here, it went up high into this area, and I was waiting for a fair value gap to fill and to go even lower. So my first position, if we go into this value here, 124 was the price. Let's go on to the highest price, 124,247. 124,247. So if we drag that, 124,247. So roughly here, okay? And why did I go in there? Because we had a breakdown on the pound, broke below, and then it came up and tagged me in by filling this fair value gap in here. We also have an order block, which is this part here, and that gave me a position. I was confident that the dollar will be going higher, and the British pound will be coming back into the daily level and eventually into sell side liquidity below, which would also be getting close to equilibrium and also into a fair value gap. So multiple things of areas to target. As you can see, we had another fair value gap on there in that blue line, which was also sell side liquidity below there. So these were areas that I wanted to take the price to. So I held that position and it crashed through into my sell side liquidity, as you can see, at 7.15. So I took some profits there, and then I waited to see what would happen. It didn't quite come to sell side liquidity below these areas, so I knew we had unfinished business. So I was looking for my second position, and my second position came later in the day. As we can see, it hovered, we've taken it all into, it hovered up to 10 o'clock, and then it created that spike, which gave me the buy side liquidity to enter again. Now, if you go on to the 1 minute, these entries are so clean, ICT entries, and you can see, okay, going back to this price action and the fair value gap, you can see that the price broke down, and we had a really good delivery of the fair value gap onto the 5 minutes, 2 minutes. So we can see that fair value gap being filled on the top there, and this would be from there to there. So we got an entry into that place area here. We traded that down, came back up, filled up this area here. It didn't give me an entry on this one. Came down, fair value gap, gave me an entry there. Created the equal highs, which we know that the market will want to go and take out. And then traded down, created another fair value gap, traded down. The previous daily high was holding. And as you can see, someone might see this action on going long, as you can, the break up. But if you think of the time and what has happened, so this is in the kill zone up to 10 o'clock. It came up to the top, took out the buy side liquidity above these resting equal highs. And like we said, like myself, people were expecting a higher into this area fair value gap and buy side liquidity from the daily. Takes out liquidity and then crashes down. And I had, as I was watching this live, I had this line here, which I wanted to see come take out. He actually touched it. If you zoom in on the first candle, touched it, came a little bit down, and then if you had your stops there, it would come and take you out because of this equal highs on the left side here. Takes out the liquidity and then crashes back down into where we had said sell side liquidity. However, I didn't hold for the whole move, and it looks like it's going back to equilibrium because I had got paid. And this is a really key thing about trading, is when you're paid, you stop. You've been paid, you close the accounts, and then you come back tomorrow to do it again. And a lot of people are wondering how I'm so consistent, is because I've learned from the Scruffy Trader and the groups and ICT that you can't better the market. What you can do is analyze, find your opportunity, find fair value gaps. If your size is 1 and you have to get 50 pips, that's $500. If your size is 10, that will be 5 grand. But you can't get 5 grand from one lot size. And this is a really key information that you need to take into account if you're doing boot camp challenges. Make sure you're trading to your lot size. If you're trading 0.2 and you're aiming for 2 grand, it's ludicrous. You should be trading for 10 pips, which would be £20. If that makes sense and you've liked this content, make sure you like and subscribe the video. Tomorrow we will be doing an interview by Saul and the fibers on how I passed my fibers, so keep an eye on that. And I will catch you tomorrow for another trade. I will probably be trading the New York session due to the interview, and see you tomorrow.
Run it, I can't take no loss.